Roadside Real Estate is focused on building and scaling a high-quality portfolio of modern roadside retail assets, including EV charging infrastructure. There's been several updates already in October, and I'm delighted to be joined by Charles Dickson, the Executive Chairman. So, Charles, this week, confirmation that the business is crystallising its roadside real estate business because you've disposed of your pub business, sold it for £1, some liabilities still outstanding which you need to pay, but what are the long-term cost savings?
Quite significant, actually, because it was a legacy business that we inherited, but it was also subscale. So we had to carry a pretty big overhead just to run it. So we don't have to carry that overhead anymore. So yeah, I think it's the right move. We want to focus on our exciting and roadside strategy, which has got a lot of potential and growth. And we've had a very busy 12 months on that. Our JV partner Meadow has been fantastic. We've done 3 deals. We've got another probably another 3 or 4 deals that we'll be announcing shortly, which we've already indicated to the market are in progress. So by the end of this year, I think the JV is going to be pretty scaled. And yeah, we see a big opportunity on the roadside side. So yeah, we're very pleased to have got rid of the pub business.
Okay, but you still have interests in the smart pillow maker Cambridge Sleep Sciences. Now, you've recently sold 1,000 shares to a venture capital fund that's generated approximately £8.5 million with a potential further million to come. Now, CSS, Cambridge Sleep Sciences, is a bit of a cash cow. So is the idea to keep your remaining shareholder? It's just that RNSs from as far back as 2021 reference disposals concerning CSS.
Yeah, no, that's absolutely right. And we've disposed of, as of Monday this week, we've disposed of just under 24% of the company in the last 7 months. So because CSS is growing so quickly and the opportunity that CSS has is in a growing market, it's a bit silly for us to sell it all in one go at the moment, because we're seeing value uplifts in our shareholding, as we've demonstrated this year already. So the strategy is to sell down gradually, and that's what we're doing. And we're trying to get the best value for the shareholders, which we've definitely achieved. I think we've realised about 17-18 million from CSS, and we've made an investment of 2.5. So we've still got 48%. So we're sort of in for nothing now. And I think the most important thing is we make the most out of the remaining 48%.
Okay, so looking at the cash balance now, what does it look like, and how are you going to deploy these funds? You've already intimated a little bit as to where you're going.
Yeah, so we issued a loan note back in April, which we're going to redeem with the stake sale. So these funds will just go into the balance sheet to improve the net asset position. As part of the stake sale we announced on Monday, we've reduced our holding in CSS below 50%. So it will no longer be treated as a subsidiary, Sarah, and it's now an investment. So that means we can recognise the value on our balance sheet. So we're going to be reporting a very significant gain to our shareholders in November, and I think everyone will view that positively. In terms of how we're going to deploy capital going forward, it's going to be very much focused around the roadside strategy.
Okay, so November, might we expect an announcement regarding dividends, or is it too early within the business plan to start distributing cash?
I think we will look at dividends over the next year or so. That's definitely something we want to start paying to shareholders. But I think we're still in the infancy of growing the roadside strategy, but it's very much on the agenda, and that's something that the board and myself are very keen to be able to do. And hopefully we might be able to have an update on that next year.
So in terms of the roadside strategy, you're developing sites in Stoke, Northants, Essex, Wiltshire. So how are they progressing? And is the idea to build and dispose or become landlords in perpetuity?
The principal business is to become landlords in perpetuity, because we see rental growth in the roadside strategy. We don't just see yield compression, we're seeing rental growth. And where you've got rental growth, that means you're going to outperform the rest of the real estate market. And Savills released some research last month, which has shown that drive-through rents just for drive-through operators over the last 18 months have risen nearly 25%. So, if you're a landlord, then you're going to see that translate into capital growth as well. So, no, we're very much focused on this sector, and we think there's a big opportunity for investors.
What about shareholder perks? I'm thinking 10% off on these off-road retail sites.
I think if we get scaled up, there's definitely some shareholder things we can look to do to benefit people on the register, whether that's around EV charging or whether that's around partnerships with some of our tenants like Costa Coffee or McDonald's, etc. But I think we need a bit more scale before we go to them with some form of proposal like that.
Okay, but in terms of goodies, I'm thinking about your share price, which has done exceptionally well over the past 12 months. Why do you think that is? Is it because of the EV charging infrastructure element within your portfolio? Because, 2035 is fast approaching and we're all supposed to be EV car compliant by then.
I think there's a bit of I think a lot of it is really getting investors to understand where we're taking the business, and we are what we are. We're doing what the company name says. We're Roadside Real Estate. One of the big drivers of the share price increase has been our investment in Cambridge Sleep Sciences, and the other big driver has been our JV with Meadow Partners in growing a £250 million portfolio of roadside real estate assets. So they've been the two drivers to the share price, and having a management team that's actually performing and doing what it said it was going to do and is committed to returning value to shareholders. That's the other reason the shares have increased, and we expect further share price growth. We believe we're still undervalued, and we've got a number of new investors on the register and looking for more.
Thank you very much, Charles Dickson, Executive Chairman of Roadside Real Estate. Been an absolute pleasure. Thank you.
Thanks, Sarah.